Good day all. Ira Epstein of Linn & Associates with your metals market wrap-up, and this is for Tuesday the 23rd of June 2020, about 5:40 p.m. Central Time. Interesting day. I went to bed about 10:30 last night, and just before I was going to bed I had turned on Bloomberg, and I'm watching Bloomberg TV, and I'm watching the markets crash in the stock market. I'm going, what the heck's going on? I got up because I was going to write something to my clients. Literally, by the time I got to my desk and turned around, the market was going the other way. And as you know, the markets roared today. So it appears that Peter Navarro was asked a lengthy question. The way that he answered it was the problem. I don't think there was anything wrong with the question. I think it's how he answered it. And while he says in his backtracking moment that he was trying to answer about COVID-19 and that the U.S. doesn't think that the U.S. can trust China, that's not how he answered the question. And the question sounded to me like he answered it, well, the deal is falling apart. The president immediately twittered, must have known he was on. No, the deal is still on. That turned the markets right. Okay. People get a chance to misspeak. We'll give him the benefit of the doubt. He's generally quite good at what he does, but everybody misspeaks. Starts with me. I've been on TV 30 years. You think you don't say something wrong? You do, because it's not a prepared script. As you can see, energy markets mixed. The API numbers came out with about a 4.5 million barrel decline on the API. They're only looking for about a 1 million barrel decline on the EIA. So the bar is set where if you're not railing with a 4.5 million, you only get 1 million out of EIA, maybe that's a little negative. Metal markets, very strong in the gold and the silver market. You know, we get corrections, that's to be expected, but these markets look good. You rallied very strong today in the foreign currency market, and as you can see, the dollar down again. So, not a lot changed through all this. Now, on the weekly chart of gold, at this point, we're up $26 on a closing basis for the week. That would give us a new high close. Let's applaud that. We haven't seen these numbers in many years. When we take a look at the chart action, this is getting a bit more decisive. Remember, I was looking right here. You're at that point, so I can see the old highs. If you don't see them, open your eyes, because people will talk on a daily bar chart, a top here, and you're coming into that resistance. Understand what they're talking about. I don't care if you're right, they're right, it doesn't matter. That's what they're going to say. And if you fail here, it's a triple top area. You've got to get through this with thunder. Well, the market trend is? Well, the market trend is up. You've got a pattern of consistent higher lows and a higher high. You've made a phenomenal run since this break low under 1680 in June of $100 an ounce. That's very impressive. The market is holding and has held the zone of the 18-day average. So where's the resistance? Because we have the 100-day here. We have, rather, the 18 in the red, the 100 here, and the 200. I got my colors wrong there. My eyesight's pretty good, too, so that's my brain. Well, when you put on the Bollinger Band, you're at it. Now, when you hit the Bollinger Band like this, if you don't back away, it's called riding the Bollinger Band. It's as though prices all of a sudden walked in gorilla glue. They can't get away from it, and they lock in. That is a very bullish situation when that occurs. If it stays up like this tomorrow, you'll hear me even say more about that. So I think the market is attempting an upside breakout. That's simple. I say that because while you're overbought, you're not backing away from it. So I always wait to see when you hit it. If you take a look at markets that hit it, you generally hit it and you start retreating right away. If we went back further, right over here, so I can get it right for you. Up to it and you retreated. This was a breakout, and it's doing what this market is doing now. See how both numbers of the slow stochastic got up and the market kept running with it right through here. That's what you look at. So we have the makings of that again. Where the market wants to stall on it, I don't know, but it certainly is getting strong enough where you're going to get a lot more press activity if it can stay this way. When we look at the gold-silver ratio, even with this, silver's not lagging. It's just going sideways against it. So what is silver doing? Well, the silver market, and I've moved to the September. So I've moved, when we're going to cover this, September silver, the copper, the Oct platinum. I've dropped the Julys. If you buy now, you can get delivery in, today's the 23rd, 7 days. Nah, I don't think you want to do that. 1836 is a key number. What will that do? That keeps the market with the pattern of higher lows. What else? The last time that we looked at this, this was a higher high than that. So I have the higher low, but I need to take out 1836 so I can make the argument I got higher highs and higher lows. That would be bullish. Now, the problem here is, as you do that, I'm only looking for the 1868.5 zone. You're already overbought. The gold chart still acts a bit better than the silver chart is what I'm saying, and this is still very much sideways action. Could it embed if it gets there and do what gold did? Absolutely. And as we know, as the PMIs, and we're seeing industry across the world reopen, there's going to be demand for base metals, nickel, iron ore. There's going to be the platinum, the palladium for automobiles. There's silver and everything you can imagine. So yeah, there's going to be demand for these goods. In the copper market, very overbought. Been here, done that. Trend still up, but I think that you're at a value area. In other words, I think the market's gotten ahead of itself maybe, where it's got to catch up with everything. Certainly not bearish. That's not what I'm saying. But I don't get the chart impression it wants to do a lot here. It's not even trying to get into the embedded area. In the platinum market, we're in an uptrend on the swing lines. We've had one. Now, the key is to just close over this 18-day average and do it. And we did it today, if you can see. So today's high, tonight's high is 855.20. 857 was the prior high. What you really want to see is this market start lifting away. If it does that, the momentum could carry possibly to the upper Bollinger Band. If it's going to stall, this is the zone, and you could develop the choppiness right here. So the stop, unfortunately, because you didn't make the higher high yet, is still back at this number. And I think what the pros want to do is see the market get through that so they can move their stop to a more reasonable number. In the palladium market, you're just stuck what we call in this pipe. You know, I've been pointing this out to you, how the market had this wider girth to it, developed sideways action, and it kept narrowing in. You're getting no edge from the slow stochastic. It's just sort of drifting. It's not telling you the market wants to go up or down. You're certainly not trending. You have a higher high, lower low pattern. We need to wait for the breakout. That's what I think. In the dollar index, today you got to 96.32, taking out this break low. So you've broken the pattern of what we had in place, and I'll remove this, of the higher lows, higher highs. I expected that to happen, and I think I've told you all the way through that I was looking for the market to have great difficulty at the 18-day average. Has it entered a bear trend? No, but it's left the bull trend. That's very important as well. You know, I realize an awful lot of you like to trade instead of the futures that watch this, the SPDR and the ETF. I keep adding more for you. You're going to see, we updated our ad. I've now got 35 charts. I just added SMH to this as well. The idea in the afternoon is to give you the confidence I hope you need, or point out a trade that you're looking at and you're going, what does Ira think of that? And that's where I want to come in. I'm not interested in directing your money at all. I'm interested in telling you what I see on a chart, and the idea there is to cover a lot of analysis. So each day I'm going to give you the technical analysis. I've already covered the fundamentals. I do that before I record it. I get you the big points of what the next day's reports are and where you're going. Now what I cover, let's take a look, because I've added a lot. I've got all the SPDRs that we had, but now I keep adding on the stock indices. You can see that. We've got the EEM that we added, the VXF. Metal markets, we've added recently XME and XGD. I added today into the others because we've added the XLU, JETS, the airplane ETF, and now we've got SMH, which covers the 25 semiconductor index. We've got in interest rates, we've added just recently HYG and AGG, and as you can see in the energies, a lot. I'm going to get to 40 of these, and then I'll rotate them. We'll rotate as things get popular, not popular, and we'll work with it. No, I'm not going to go to the triple. You know, what they can do in some of these ETFs, they'll give you the triple leverage. I'm not interested in that. I'm interested in the mainstay ones that people want, and I will keep bringing them on. People brought up like BETZ, B-E-T-Z. I'd love to have it on here. We need to get more than 7 days of trading for it. But when that gets there and when there's a chart we can work with after about 2 months, we'll bring that on too. So I'm reserving a spot for that because I think online betting, I think it's got a place, and I think a lot of people watch things like that. So I give you a lot. The video takes about 15, 20 minutes. I will give you what I think are buy, what are sells, where you work with it, how you go with it. Now, I've also put together a combo, tying together my futures morning subscriber video with this in what we call a combo package. Why? Because at the end of the day, on the ETFs, you're going to get, after that, when the close is at 3 o'clock for these, at 5 o'clock, the futures open 2 hours later, and they go right through the morning. Things change. And on a lot of the ETFs, they rely on what the futures markets are doing. The spiders are a little bit different. Why? A lot of them are the sectors within the bigger market. So you always want to pay attention to what's going on there. To find out more, simply go to our website, www.iraepstein.com. Under the word research, everything is explained there on the top. Thanks for watching. I'm Ira. See you tomorrow.